yourself, is my MACD strategy actually working? The short answer is, maybe. MACD, or Moving Average Convergence Divergence, is a popular trading indicator that can be used to identify buying and selling opportunities in stocks, Forex, and cryptos. While MACD can be a powerful tool when used correctly, it's important to remember that no indicator works 100% of the time. To determine if your MACD strategy is actually profitable, you'll need to backtest it. In this video, I will backtest how the MACD indicator performs on different time frames. To do this, I will make 100 trades on the 5-minute, the 15-minute, the 1-hour, and the 4-hour time frames to see which is the best. Set our indicators first. Go to tradingview.com, click on the indicator tab, then search for MACD. Choose this one. The classic strategy uses the MACD indicator for buy and sell signals and the 200 exponential moving average to determine the trend. So our next indicator is the exponential moving average. Search for EMA and click on the first one. Now we will change it. Click on the settings button, then on the inputs tab and change the length from 9 to 200. Our indicators are ready. Let's look at some examples of buying and selling conditions. We can take a long position if the MACD line crosses above the signal line, and if the price is above the 200 EMA. It is important to note that only those MACD crosses that occurred below the zero line are valid for long positions. In this example, we can see that all our conditions are met, so we can take the position. Our stop loss will be the previous swing low. Our take profit will be 1.5 times the risk. It's a winner. In the following example, our entry is not valid, even though we have a valid MACD cross. We are below our moving average, so we skip this trade. Here we have another valid signal. The MACD line crosses above the signal line and we are above our moving average, so we take the trade. Price hit our take profit. The opposite is true for a short position. We can take a short position if the MACD line crosses below the signal line and if the price is below the 200 EMA. It is important to note that only those MACD crosses that occurred above the zero line are valid for short positions. In this example, we can see that all our conditions are met, so we can take the position. Our stop loss will be the previous swing high. Our take profit will be 1.5 times the risk. It's a winner. In the following example, our entry is not valid, even though we have a valid MACD cross. We are above our moving average, so we skip this trade. Here we have another valid signal. The MACD line crosses below the signal line and we are below our moving average, so we take the trade. The price hit our take profit. Now that we know the rules of the strategy, it's time for the backtest. I will risk 1% on each trade for the possibility of 1.5% profit. First, I will execute 100 trades on the 5-minute time frame, then the same amount on the 15-minute, the 1-hour, and the 4-hour time frames. To keep the video short, I will fast forward the process for you. Before I show you the results, I would like to ask you to subscribe to the channel and like the video to support the channel. So we got our results. In the 5-minute time frame, the strategy achieved a 54% win rate and 40.7% account growth in 2 months. The account grew by $407 on an initial capital of $1,000. In the 15-minute time frame, the strategy achieved a 58% win rate and 55.5% account growth in 5 months. The account grew by $555 on an initial capital of $1,000. In the 1-hour time frame, the strategy achieved a 51% win rate and 30.5% account growth in 9 months. The account grew by $305 on an initial capital of $1,000. In the 4-hour time frame, the strategy achieved a 45% win rate and 12.4% account growth in 18. The account grew by $124 on an initial capital of $1,000.